Shallow men believe in luck. Strong men believe in cause and effect. Ralph Waldo Emerson. Cause and effect for us is 10 to 15 minutes each and every day. Practice trading, training, taking the daily videos that we put out for you. Now you have to subscribe to get those. You subscribe for free at chartingwealth.com. Again, if you're watching these videos, please give them a thumbs up. Please share them with your friends. Please subscribe to the channel. We appreciate all of you being with us. I love coming to you every day, completely free to share with you these market reviews. I am always enthused because there is nothing like taking money from the market. It feels so absolutely wonderful. And I want you to get that feeling too. It may take you a while to get there, and it doesn't cost you anything but 10 to 15 minutes each and every day to learn how to do it. So train with us, stay with us each and every day. You appreciate what we do to support us at Patreon. And of course, we have that 3-part series, Options Made Simple, the Charting Wealth Way, for any of our 3 membership levels. Let's jump into these charts. We see stocks are down, gold is down, Bitcoin is down. The only thing that's up, and it's up just slightly, that is 20-year bonds. Let's first look at the S&P 500 going into 2.5 days of down movements. STC has not gone red yet, but we are apparently heading that way. That's the way it looks. Now, when we get to the NASDAQ 100, you'll see we jumped into a down trade this morning. But let's look a little bit further. We're green on the STC on the half day. We're green on the STC on the 2-day. But look at this new 2-day candle. It is forming a red spinning top. Again, after 6 days of pretty decent up movement, we see that things are still red on the weekly chart. Weekly chart is green 2 days into a 5-day candle, but not reaching the highs of last time. So again, we're not blasting through that 200 EMA yet. We'll see. I mean, we've been going up and down, up and down, up and down. We'll see just how down it will go. Now we transition on to from the S&P to the NASDAQ 100. And we go ahead and look. We jumped into a trade this morning when the STC went negative. And things are moving slowly in the right direction. Again, went red down here, so we went ahead and pulled the trigger. Of course, how did we set our profit and loss bands? We used the average true range. If you look at this number over here, this red number next to RMA, when I go to where our jumping in point was. Now look over to the left under RMA on the left-hand side, bottom of the screen. You'll see that it's 593. Now if you look up here where the stop is, see where it pops up on the upper left. The minute I move away, it will go away, but it's right there when I go back. That's 593. Isn't it interesting? Why is that 593? Because that's what we're setting our stop at. That's the average true range for that time period. That means that's how much the range is on average over 14 half-day periods or 7 full days. So that's where we set the stop. Now we set our profit band at 2 times that. So that's at $11.86 or 4.03%. Our loss is set at 2.01%. Now you can adjust your X trading amount, that's the average trade that you make, by that percentage to actually level that out so that you're able to adjust your losses based upon volatility. So you're in a very volatile market, you just reduce the position size. We have a great training on that. It's in the always winning method. In fact, at the end of today's show, I have the wave method. You'll get some idea as to what we're talking about there. And I will put at the end of today's show for you, that's the special training in the show notes, but I'll put the always winning method at the end of today's video for you. So those of you who are interested in what I'm talking about here and haven't taken that training yet can do so. Now, as we look at what's happening with the NASDAQ 100, we do see that, of course, it's down for the day. Now check out the 2-day. It is still green, although we have a red down candle forming. The weekly chart is still red, and like the S&P, it's not reaching a higher high this week. and we shall see where things go. We can see where things bounced off that 200 EMA on the weekly chart. So we have activated a down move. Now you might say, Tom, why would you be buying the S&P 500 or the NASDAQ 100 rather on this one? If it's going down, we wouldn't be doing that. We would be looking to either buy puts or to get into an inverse fund. What is a simple inverse fund on the NASDAQ 100? PSQ. What is that? Well, let's see, I didn't put that in right. I put PQS. PSQ, there we go. It is the ProShare short. In fact, it is set up to move in the opposite direction, percentage to percentage. You can see the price is different, but the percentage of movement is the same. Now, it does have higher fees. Again, significantly higher fees, but you're only in for short periods of time, and it does rebalance every day. So if it goes up 2% one day and then goes down 2% the next day, it doesn't go down the same amount that it went up because it resets and goes down 2% from the higher price. So again, got to be careful there. You're only going to learn this by practice trading it, so I encourage you to do that. So again, as you start getting good practice trading with the low price of per share here, it doesn't cost you much when you start doing your fractional trading. After you get good at it, put a little bit of money on the line, maybe $100 worth, maybe 4 or 5 shares, and then you can actually do a little buying, do a little selling, and not put much at risk, but get to see what it feels like to enter a trade, to put in a good till canceled sell order, to follow the percentages in a few pennies as to a few dollars as to what you're making or losing. So much better than throwing real money at it, lots of real money where you just get hammered. That's why people quit. They don't get the hang of it. They don't practice enough. They're not good at it, and they just lose and lose and lose, and then pretty soon your money is gone. You're treating the stock market like it is Vegas, and it, like Vegas, will kill you if you try to treat it that way. So that's where we are on the NASDAQ 100. Let's move from there and go to 20-year bonds. Where are we there? Well, they're up a little bit, 0.08% for the day. And we can see on this half-day chart, we are well below, oh no, I just screwed that up. I'll come back later and fix that. We are well below the 200 EMA, well, I say well below, not that far below on the half day. We're well below. Now we're green on the STC, moving up. We're looking for a short trade here. We are well below on the 2-day. You can see just how far below we are. My gosh. And we're well below on the weekly. You can see just how much bonds have crashed. Check that out. They have just gone so far down. So what we will do is we will continue to watch bonds, green on the weekly chart, green on the 2-day chart, green on the half-day chart, and maybe bonds will at some point push up through this 200 EMA. That would give us a chance to jump in. Again, realizing that on those larger charts, we are well below the 200 EMA, and a long way to go to see those start crossing over. But again, if bonds start to die on the vine where they're slipping sideways here and roll back over, of course, we will be looking for that opportunity also. But don't have a trade there just yet. Now, that's where we are on bonds. We will go to gold. Gold is negative a little bit for the day, 0.12%. It is green on the STC, below the 200 EMA. We look at the 2-day. It is red, well below the 200 EMA. And where we see gold on the weekly is it's bounced off the last 2 weeks. Well, it's touched down to the 200 EMA on the weekly chart and not closed below that. So we'll continue to watch, wait and see what's going to happen. But again, if we have a rollover on the STC on this weekly chart, of course, we will be looking to short gold at that point. Don't know if that's going to happen. If it does, we'll be ready for it. Gold has made some tremendous down moves of late. I keep hoping it's going to bottom out somewhere here around the 158 mark and then really take off up, but haven't seen that occur yet. Let's talk about another one that is it reaching a bottom? Don't know. Bitcoin down again for the day. XBTF down 4.59% for the day. 2 days in a row, pounding down movement below the 200 EMA on that half-day chart. We look at the 2-day chart, and of course, we had 2 strong up candles, and then over the last 3-4 days, it has been dying on the vine and moving down. So we'll continue to keep an eye on Bitcoin and where it's going to go. Of course, on the weekly, still quite red. 1 week of up movement this week, setting up to be another red candle. Things are, of course, subject to change, but Bitcoin, of course, of late, we've just seen blood in the streets. Hopefully that will come to an end, and when it does, we'll be the first here to tell you to get ready to do some practice trading in the biggest of the cryptocurrencies. That's where we are, folks, as we end the day. We always love to have you with us. We always love to hear from you. CW@chartingwealth.com. Hope you consider jumping into that down practice trade on the NASDAQ 100 this morning. We'll see how it goes. God bless. All the best from the whole team at Charting Wealth World Headquarters.